Hello, Business 330 students. Professor Hassey here. Week 7, October 6th through October 12th. Our title for this introduction video to Week 7 is Corporate Financing. As you can see by the agenda on the screen, a rather full schedule for this week number 7. 1 week to go. Next week, our course concludes. And in this week, you have assignment number 3 due tonight, Tuesday, October 5th. We'll have a Road Kings review session in addition to our class on Wednesday night, our remote class. This Saturday morning at 10:30 a.m., there is a Zoom link set up in week number 7 of Blackboard. If you need your group needs any last minute review or help on the Road Kings case, Saturday morning from 10:30 till about noon hour, I will be available for review. Also this week on Wednesday in class, remote class, we'll be looking at an outline of the final examination. And we'll be covering chapter 16, those 2 sections from the text, and chapter 17, those 3 sections from the text. This leads up into next week, our final week, week 8, where you have the Road King case due Tuesday, October 12th. We'll talk about chapters 18 and 19 in those appropriate sections. And you'll have your final examination, which will be posted on October 13th and due on Tuesday, the 19th. All leading up to course grades being posted on Friday, October 22nd. Wow, lots going on. So we just take one day at a time, each step at a time, and we'll work this all out. Again, we'll review Road Kings and our checklist on Wednesday evening and talk about the final examination review. If everybody gets their assignment 3 and posted by Wednesday, we'll look at assignment number 3 and the review of it. And then we'll talk about chapters 16 and 17. Speaking of chapters 16 and 17, here's a little video introducing our week.
Our session is an overview of corporate financing. We cover patterns of corporate financing in terms of equity and debt, financial markets, and financial institutions. Corporate financing comes from both internal and external sources. Internal sources consist of profits from operations net of dividends. Retained earnings are measured as profits minus dividends paid. And retained earnings are the principal internal source of corporate financing. External sources of corporate financing consist of equity, which comes from the sale of stock to owners, typically the public. Equity amounts to owner's money, and debt, which comes from the sale of bonds to bondholders. Debt is considered other people's money. Over the past 15 years or so, most corporate financing has been from internal sources, that is, from retained earnings. There's also been a fair amount of new debt, especially in the late 90s, when the stock market was so positive. But look at new equity. In most years, there's actually been negative new equity, which means that corporate repurchases of their own stock have exceeded new corporate stock sales. We'll discuss corporate stock purchases and sales in subsequent sessions. Here is one example of corporate financing is the right side of the balance sheet for Merck for 2003 and 2004. Note that in 2004, Merck had $42 billion in assets. So how did it finance these assets? Its total debt was about $25 billion, consisting of current liabilities, where current liabilities are loans that have to be paid off within about a year, and about $4.5 billion in long-term debt, plus some other liabilities. The total here is about $25 billion in debt. The equity on Merck's balance sheet was about $17 billion. You can see that number down here. Most of the equity consists of retained earnings, or earnings of the firm after dividends paid. Merck also has over 2 billion shares of stock outstanding. We'll discuss the valuation of common stock in a later session. Corporations go to financial markets to get external financing, both debt and equity. When corporations issue securities to owners, that is stock shareholders, or lenders, bond owners or bondholders, they do so in primary markets. When stock owners or bondholders trade, they do so in secondary, not primary markets, such as the New York Stock Exchange and the New York bond market. Secondary markets are formally established markets where buyers and sellers of existing, that is, previously issued, securities are traded. Securities can also be traded in over-the-counter markets, which are informal markets sometimes supported by brokerage houses. In practice, companies issue obligations such as stock certificates and bonds to financial intermediaries such as banks, insurance companies, and brokerage firms. These intermediaries provide funds back to the company to support the company's assets and operations. These intermediaries, in turn, issue their own obligations, such as bank accounts, insurance policies, and mutual fund shares, to their investors, who might be depositors, insurance policy holders, or mutual fund investors. These investors provide the funds to the intermediaries, which ultimately go to financing the corporations in which the intermediaries invest.
One reason investors buy stocks is for the dividend payment. When investors buy stock in a public company, they own a part of that company. Dividends are a portion of a company's profit that the company decides to share with stockholders. There are three types of dividends. Ordinary dividends. This is the most common. It's paid in cash and may be paid quarterly, semi-annually, or annually. Stock dividends. In some cases, companies who want to conserve their cash can pay their dividends as shares of stock. Special dividends. Companies who have a good quarter or year might declare an extra dividend of additional cash or stock beyond their current dividend. Investors seeking income typically buy more stable and profitable companies that pay a dividend. They tend to be more interested in the regular dividend payment than the growth of the stock's price. Also, when interest rates are low, investors may reallocate their funds into more productive assets like dividend-paying stocks. View a list of top dividend-yielding stocks or access easy-to-use tools to find stocks that pay dividends on your own at etrade.com.
Okay, that's just a very general view of corporate financing, and we'll get into specifics in debt financing, and you're already familiar with stock financing. And dividends, we'll get into more specific. Good evening, everybody. Welcome to our last remote class. Sorry about that. I had a little feedback from a prior section. So as I was saying, we'll get into specifics in our class, our remote class on Wednesday night. Please come, groups, your teams, please come with any questions you have about the Road Kings review. I'm sure some of you are knee deep in it this week, and finishing up your calculations and getting to ready to write your papers. Also, if we can, we'll review assignment 3 as best we can, depending on when all our work is posted. So as we wind down and begin to the final sessions of our course, it's time to finish up our work, the paper, the final examination, and we'll talk more specifics about the final in class on Wednesday. And don't forget, there is a review session on Saturday. It's a voluntary session, should you desire to attend. Thanks, everybody. We'll see you in class on Wednesday night at 5:30. Adios.